The capital allowance super deduction. The capital allowance super deduction was introduced by the Chancellor in March 2021. So in this video I want to look at why he introduced it and what the effect is on, particularly on small and medium-sized businesses. I do regular videos on tax and accounting issues, so if you'd like to be kept up to date then please subscribe to the channel, and if you press the like button it really helps me and the channel, and it allows you to show your appreciation. So the capital allowance super allowance. Now shall we just go through to start with why he announced it, because it might, at the face of it, it looks like, oh, it's amazing, it's a real gift from the Chancellor. No. It's much more cynical than that, because he increased the rate of corporation tax from 19% to 25% for most businesses, unless your profits are less than £50,000, you will be affected by this increase in the tax rate. Now you could say that it's a 6% increase from 19 to 25%. But I don't see it like that. I see it as a 31% increase in tax, because the tax you pay goes up by 31% on the same profits. So I see it as I think just short of 31% increase in the tax that companies pay. So this is a huge increase in tax. I think the good thing about it is it was the only increase in tax. So although it does sound, 31% increase is just so much, but it is the only tax increase he did. So I think maybe we should be grateful for that. But because he increased the rate of corporation tax, what would have happened if he hadn't introduced the super deduction is that people would not have done CapEx, capital expenditure, until after the increase. Because in terms of pound notes saved, you would have been going to save more money if it was going to be relieved at the higher rate of 25% than if at the lower rate of 19%. So if you had £100,000 of capital expenditure under the new regime in a couple of years, you would get £25,000 of tax relief, whereas currently you'd have £19,000 of tax relief. So what he noticed this, so what he did was he said, okay, you can have your £25,000 of tax relief now, because we don't want you delaying your capital expenditure for 2 years, because really with the end of all this health crisis we need companies to invest. We don't want them to be holding back on their investment, and that's why he did it. So if you're thinking he's giving just a free gift, it's not really. It's just he has to do it in order to make sure that businesses keep investing. Now, for most companies, most small businesses, the allowance is £1 million. I don't think any of our clients do £1 million of capital expenditure. So when I talk about this, I assume that you are within that limit of £1 million. So what the super deduction means is that your capital expenditure over the next 2 years will be higher. The relief you get from it will be more than it would have been if you did it last year, because instead of when we do your tax comp, instead of writing 100% of your allowance off against tax, we'll write 130% off. So in that sense you will be better off. If I'm going to be really picky, actually, if your profit is between 50,000 and 250,000, which is actually quite a lot of our clients, you'll be marginally, get slightly less tax relief now with the super deduction than you will get in 2 years' time, because your marginal rate of tax under the new regime will be 26.5%. Now people That's not widely known, and I know they get a lot of confused faces when I say this 26.5%. But the way the new regime will work is that if your profits are at 50,000, you pay 19% tax on all of your profits, and if you earn $250,000, you'll pay 25% on all of your profits. And in order to cover to marginally tax that in between those two rates, the marginal rate of tax between 50,000 and $250,000 is actually 26.5%. So you would actually, if your profits were sort of 200,000, you'd actually be slightly better off delaying your capital expenditure. But so the super deduction isn't enough, but it is actually quite marginal at that rate. And I would suggest that if you're going to invest in, you need to invest for the right reasons, and that to adjust for relatively small amounts of money would be the tax tail wagging the business dog. On the super deduction, there are a few things. It is only for limited companies, so it's not for partnerships, sole traders, all the rest of it, and that's precisely because of the reason that I've just given. It's because it's limited companies only that are going to pay the higher corporation tax. So this super deduction is limited to limited companies, and it's not for things like second-hand equipment. So if you buy a second-hand truck or a second-hand van, then you won't get the super deduction. And there are some restrictions on the type of asset, but that's in the detail, and I think a little bit too detailed for a general purpose video. So there we have it, the super deduction. It's a slightly cheeky one because it's done for absolutely cynical reasons, but you do at the end of the day get, if you're in a limited company, you might get more allowance than you otherwise get, so we must be grateful for that. And it is a precursor, and it shows the 30% increase in the capital allowance, shows the increase in tax that we're going to pay once we go into the new regime, which doesn't start for another 1.75 years. So we've got a little bit of time before all that breaks in, and while we do that, the super allowance might help. Thank you for watching. I do regular videos on tax and accounting issues, so if you would like to subscribe, you'll be very welcome, and if you press the like button, it really helps me and the channel. Thank you.